I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Balara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you.
Hi, everyone. I'm Jason Balara, and this is the Know Your Why podcast. Today, I'm here with Tommy Brant. Tommy is a recovering electrical engineer and data scientist turned full-time real estate investor. Tommy, first of all, thank you so much for coming on the show today. I really appreciate it. I appreciate you taking the time out.
For sure. Yeah. Like we mentioned before, I was thumbing through a couple of your episodes and you've had a lot of hot shots and celebrities and superstar in the space. And, I'm honestly just humbled and honored to be a part of that. And hopefully I can add value to your listeners.
I'm 100% sure that you will. And I think, everybody has value to add. Everybody's, you can't look at what people are at, 5 years from where you are in your journey. None of that really matters. It's getting better every day. But with that being said, why don't you tell us, kind of your background, your story, where you came from, where you're headed, that kind of thing, and then we'll dive into it from there.
For sure. Yeah. Thanks, Jason. Yeah, I do joke that I'm a recovering electrical engineer of 12 years. I worked with the same company since I graduated. I graduated from Georgia Tech as an electrical engineer, grew up in Georgia most of my life, and work took me to Middle Tennessee, primarily just on the outskirts of Nashville. So I've been in Nashville, Tennessee for 13 years last January. I worked as an electrical engineer most of that time. Most of it was customer facing and most of it was on the sales side of the organization. I got to, towards the end there, I was trying to figure out, what do I want to do? What do I want my next step to be? Do I want to be in sales for 30 years? And so I started engaging in some data science courses. So I got a data science specialization from Johns Hopkins University. That led me a little bit to the operations side of the business. So business analyst, sales operations, rather than being so customer facing. And I thought that was what I wanted. Turns out that's not what I wanted. But through that process, I did gain a lot of confidence in my ability to understand what it takes to run my own business. Right. If we're operating, a multi-billion-dollar a year revenue business, surely, starting a business for myself and starting from the ground up couldn't be nearly as challenging when it comes to managing pipeline and headcount and all the things that go into that one. And so, but also with the last role, I would say that I gained a lot of confidence in kind of overcoming the impostor syndrome, right? If I'm coming into this business, who the hell am I to tell all these GPs and directors, what's going on in their business? Surely they would know better. And, but I'm kind of coming at it from a numbers side and from a P&L side and, per product line type thing. And so trying to add value in that way, but also just kind of going through that and knowing that it's like, hey, Tommy, there's a gap in the business, go fill it, right? Really satisfied my itch as an entrepreneur. Right. You can imagine that's a lot of stuff. It's like, hey, there's, you have a business, get it going, get it off the ground. Right. So that was kind of an adventure in itself. And how that translates to the real estate side of things. My first intro to real estate was in 2006 when I was still in college. And so I worked for my friend's dad, who was a general contractor, and we made mobile homes rent ready. And so we were most of the time just doing light rehab, cleaning them up, cutting the lawn, and then just turning them for the market to rent. Given the demographic and the location, about 15% of that was post eviction. And so you're walking into some of these units and it looks just like a natural disaster just swept through the inside of the place. And so there's trash in one corner, there's hypodermic needles in another corner, there's used diapers in another corner. And you're wondering how this thing caused that splatter mark in, 2 rooms over. The utilities have been cut off for 2 weeks and you're looking at your friend, you're like, who's going to open the fridge? Not it. And so it was full of surprises, we'll say, but through that did 2 things for me. One, it built a lot of character, and 2, it definitely gave me the ability to see through the clutter, to have the vision for the finished product. And so that introduction to light construction, we'll call it light renovation, directly affected my ability to choose my house whenever I was ready. So fast forward, it's 2011. I've graduated college, about 3 years worth of, savings from being an engineer. I'm like, all right, I'm ready to stop renting. Right. So let's see what we can do. So I start poking around on Zillow, and I found this house that was grossly undervalued relative to all its neighbors. And I said, okay, this is a good start. It was a short sale from a bank. And, it was my realtor thought I was crazy when I told her I wanted this house. Every single room needed to be updated. There was a nice sagging bulge of drywall over the garage from a roof leak. There was a pool in the back that was solid black. There was pool houses with no foundation. They were just it was a slow motion, like Leaning Tower of Pisa. They were starting to lean a little too heavily on one side. And I told my realtor, I was like, I want this house. And she's like, she shoved like 5 other houses in front of me. And she's like, let's just look at like something that doesn't need any work and just, give you a feel for the market. And so fast forward, I didn't buy any of the houses she showed me. I bought the house that was a short sale. And so it was a slow live and flip. And I rented out a bedroom to a colleague of mine. So he was paying the mortgage while I was funding the repairs during the time. And so every year I would save up for one, what I'll call a major project. So I saved up 1 year for all new hardwood and the living space, the foyer, the den in the back, sunroom. Another year was nothing but kitchen. I waited till like a hailstorm so I could have an insurance claim to replace the roofs. So we'll call that strategic, or a happy accidents, whatever you want to call that one. But fast forward to 2020, we liquidated that property. I didn't owe anything on it because I was drinking a lot of the Dave Ramsey Kool-Aid back then of all debt is bad debt and there's no such thing as good debt. Things I would do differently. I would probably leverage some of the equity that I injected into that a little bit sooner. But nevertheless, after that, I bought 3 single family homes in a 6-month time span, getting heavily educated on everything, bigger pockets. I got invested in, I didn't get invested, but, after reading the Rich Dad Poor Dad, probably too late in my life, not too late. It's never too late, but at reading it later in my life, then I wish I would have come across it. Then I just got, heavily invested in real estate. And, if you ask my friends what I'm really good at, they would say he's really good at taking a new subject and learning it really quickly, learning something quickly. And I think if you unpack that, really, it's like, if there's a wrong way to do something, I'll find it. And so you can afford that in the single family space. You can afford to make a couple mistakes and stuff like that. And so, but whenever I was trying to figure out what to do with the proceeds from my flip, I was looking at everything except real estate. So I was like, let me see what day trading looks like. Let me see what goes into that. I read some books by, billionaire fund managers. And my takeaway there was to buy ETFs and don't look at it for 30 years. I said, that's not really going to get me to where I want to be in the timeline that I want to be at. What else can I do? I looked at e-commerce stores, Amazon businesses, and then I finally kind of gave up and I was like, fine, I guess I'll look more into this real estate stuff. So now I've got a couple single family homes, use as long-term rentals. I've got a vacation rental in Panama City Beach. I've invested as a limited partner in 2 apartment syndications, one in Louisville, one in Huntsville. And a couple Thursdays ago, we closed on a 55-unit storage facility. And so probably a couple things to unpack there, right? Yeah. But it's, a lot of it has been due to networking and constantly staying engaged in local networks here in town, also virtually, but also constantly educating myself on business and building teams and mindset and being, staying motivated, having proper perspective on that types of things. So that's where I'm at today.
Yeah, definitely a lot to unpack there, but I think like a lot of really good stuff for, that sort of that journey that we can sort of pull apart and show people like, here are some really good steps to take. And specifically, the overarching theme here is it's like you take action and you educate yourself. When you get, you decide you're going to do something, even that process of sort of working through, okay, what do I want to do with as my sort of investing future, and saying, yeah, no, it's not, 30 years in an ETF. It's not an Amazon store. Like there's going through that process, figuring it out, but not like spending 10 years on that. Like okay, no, that doesn't work for me. What are my goals? How do these investment vehicles fit into my goals and that sort of thing? So I think like backing up a little bit, some of the things that you, and I find this with basically every guest, but like our backstory, our past lives, whatever it is, wherever you might come from, it all fits into kind of the real estate space. And maybe that's because the real estate space has so much diversity, so many different angles that you can come at it with. But, for example, you were, kind of working in and cleaning up these mobile homes. That's just seeing that sort of construction side, seeing what it's like to deal with whether that's tenants or evictions, things like that. Like those are skills that many people don't have. They don't get that experience. I've done these things as well, so I know they're not 100% good experiences. It's not nice to open that refrigerator that's been when the power's been off for weeks. But the point is, you saw what that's like. You saw, so you can, even if you never did any more construction for the rest of your life, you can speak intelligently about it from there and know what goes into rehabbing units, whatever you want to, whatever that unit applies to. And then even your engineering background with sales and then business development and management, all of that, it all fits, right? It all fits in that, whether it's single family, multifamily, syndication, whether it's self-storage, there's a business component to all of this. And so, kind of having a little piece of each of your past experiences to put in there, I think is incredibly important. And I feel like I find many of my guests use that to their advantage. Do you have sort of a long-winded way of getting to this question of, do you have specific things you would point to from your past that you've used that have really helped you kind of find your way into, real estate investing? And specifically, I know you're sort of heading towards syndication and things. How would you incorporate those past experiences?
For sure. And I guess I'll lead off by saying a couple of things. For me as an engineer, and everyone is going to leverage their past experience, and their past experience, everyone's going to be a product of their environment that they were raised in, where they got educated, where they're working. Everyone is on a different journey, and it's not always a straight line, right? It's going to be, zigzaggy in some regards. And so I'm no different. So I'm leveraging what are some of the professional skills that I developed in working as an engineer professionally for 12 years. It just so happens to be a lot of it was customer facing. So I'm on top of professional communications, managing expectations with the intent to exceed them. But also, and some of that is sales, right? If you want to take, expectation management, right? You have to manage it at a point to where you can over deliver, or at least have the perception that you're over delivering, or you're not over managing isn't the right word, but you definitely want to overperform from the customer's perception. And so it's all about, as far as that goes, that comes with anchoring the discussion somewhere and then elevating it, right, based on your performance and your delivery there. And so knowing that, maybe I have some soft skills, some hard skills to bring to the table, then it's a matter of, okay, I'm 10 plus years business experience. Where do I fit? If I say, I know I don't want to be in the engineering space forever, just because from my perspective, my takeaway was, it was difficult, read impossible, for me to align my engineering job or, industry or career with my real estate investments. And so for me, it was just like, I'm living a double life, right? There's no alignment. There's no clean sweep to that, whereas like, if I'm a realtor, right, there's definitely some alignment there. If I'm a property manager, there's some alignment of skills there. You could argue even the same thing if you're a lender, some things like that. And so for me, I was just like, so based on what I have, plus that, this is the part that a lot of people don't think about, how do you want to grow? Right. So based on where I'm at and where I want to grow as an individual, what fits into that space? And so for me, it was just like, all right, I know I want to get better at, maybe public speaking. oratory skills, presentation ability, just because I feel like there's so much that is perceived from a person based on their ability to present. Right. So I think you're not going to have a leader in a business that can't speak well, about their vision or elaborate on their their values and things like that. And so things like that, where it's like, all right, I need to have opportunity to practice this, maybe in a low risk environment, right? Even going on podcasts like these is I look at it as an opportunity to sharpen my skill. Right. And so based on my skills plus where I want to be, I just saw a lot of that line up with syndication. And, that's kind of that helped my decision to go full time and lean fully into this one. The other component of that one was kind of self-discovery, and that if I have no option and I only have, one way to go, like that's better for me. Like the likelihood that I'm gonna, rise to the occasion and execute is way higher if I have no options. And so putting myself in a situation where it's like, all right, well, we've capitalized, we saved up for 2 years of expenses. My wife is still working, let's go day one, so I put in my 100, it's fun to say, I put in my 100-day notice on my 35th birthday. We're coming up really close to my 1-year anniversary for being full-time in real estate. And so it's just, there was a quote that someone said one time where it's like, don't underestimate how far someone can come in a year. And so, I'm excited. I think I've come really far as just, networking, but also some of a lot of the traction we've had in our business, whether it's tangible or intangible, right? I'm really pleased with how far we've come, but I'm excited to see what I accomplish another year from now. I think it's going to be astronomical and be way more exponential than what we did in the past year. And so, for me, it's like, I was initially looking at everything as the single family housing space. I was like, I interviewed a couple of realtors, I interviewed a couple of property managers, and I was like, I don't want to be a realtor. I don't want to be a property manager. I don't want to be a wholesaler. I don't want to be a flipper. I don't want to be a lender. And so figuring out what I don't want to do is, arguably the first step in that one. And I would say that the syndication, I think is not really well known, that it exists, that you can team up with a bunch of people and go buy real estate together. Right. That's probably a foreign topic to people. Like, I think when most people are driving around downtown and they see these huge apartment buildings, they're like, oh, that's owned by a conglomerate corporation with billions and gazillions of dollars and all this stuff. Yeah. They're not thinking that's probably a small group of like 20 people or private investors that are, owning this building downtown. And so it took me a while to get educated and even find out that existed. But once I did find out that existed, I was like, this speaks the most to me based on where I'm at and where I want to be.
Yeah. A lot of really great points. And I think just, kind of piggybacking on what you said about, underestimating that year, there's another quote that I really like, is that most people will overestimate what they can do in a year, but underestimate what they can do in 5 years or 10 years or whatever it is, something like that. And it's true, because as you mentioned, you use the word traction, and it's something that in the beginning, it's going to feels like nothing's happening, right? You're like doing whatever you can, you're educating yourself, you're actually, I wanted to touch on this too. You talked about, sort of using opportunities to learn to speak more eloquently, whatever word you want to use, but basically be able to have your presentation skills be sort of top notch so that you can lead a business, a company. I think that's I agree with you 100%. That's key. It's a very important skill that if people don't, if what you're talking to them about doesn't sound natural to you, probably, especially if you're trying to, bring in investors, they're probably not going to feel very confident in investing with you. You may know it cold. You may know it like the back of your hand, but if you can't then express that to other people in a way that they can understand, and everybody's going to understand maybe a little bit differently too, you have to develop that skill. So I think that's huge. But you're doing all that in the beginning, right? You're like, well, how can I make myself better at this before anything's really happening? But then you hit that traction point where you see things happening, and you close that self-storage deal, and you're like, it's just gonna pick up from there. Like, it's gonna open up doors. Your opportunities are gonna become more plentiful, and you'll be able to get more selective, pick and choose what you want to do, that kind of thing. So it's a really cool kind of process to work through. And what you're doing, the things that you're describing, for people listening, is exactly what you have to do to make that happen, right? It's not just going to happen. You're not just going to leave your W-2 job and say, okay, I'm a real estate investor now. Somebody make this, nobody's going to make that happen for you. So you're taking all those steps. You're taking a calculated risk. There's a lot of thought and sort of work that goes into getting into that, switching that mode, I guess, out of the W-2 into being an entrepreneur and business owner. And I think one of the reasons why, you work through all those single family options and stuff, and you said that you didn't want to do that. And probably one of the reasons why syndication appeals, I'm guessing, is because it's a business, right? It's actually a business. Each property you're running a business. And so it really does kind of scratch that entrepreneurial itch quite well, because you've got to put all those processes and systems and things that you've been learning into place to make each of these properties function, efficiently.
For sure. Yeah, the things that drew me to syndication was definitely I feel like I was able to give back more, or I could be way more inclusive of the people that wanted to be in real estate, but didn't have the time to invest, to understand markets or analyze deals or find deals, stuff of that sort. And so I start getting questions of, hey, Tom, I see you did this thing with your house or this other apartment building. Let me know when another one of those comes up. But in the single family space, there's really not room for small players. Like teams of 3 are practically unheard of in single family space. It's it's kind of 1 or 2 people, and they're doing all or most of the work in those types of scenarios. But with bigger assets, you're allowed to specialize in something, right? You're allowed to focus on asset management, or maybe you're just a deal finder, or maybe you're plus underwriter, that type of thing. Maybe like you can get equity in a property just for being local to the market. Like that blows my mind. You just being a connector, is what can earn you equity in some of these properties. And that's exciting to me. Outside of that, I would say, because you're allowed to focus, your opportunities to scale the business while maintaining like low operational costs and stuff like that. It's pretty insane how well you can scale the business without having to incur substantial operational costs.
Yeah. And you would do that, I think, just so people understand, that you do that by partnering with others, right? You sort of have 2 ways to build that team. You can either partner or you can hire. And especially in the beginning, you're not going to, you don't step into real estate syndication and suddenly have a bunch of money. That just doesn't work that way. It's not actually a high paying job at the beginning, right? It's can be, as someone who also recently left the W-2, it's effectively a pay cut with the future in mind, right? It's that vision. And so you have the option, like I said, is either partner with other people that have complementary skill sets, or you start to hire your team. And so it's a balance, right? It's figuring out that balance, especially in the beginning, where it's like, okay, people will say that equity is more expensive, right? It's more expensive to give up a portion of the deal, or give up, to a partner, or to, someone that's going to help you in one of those seats. But sometimes that's what you have, right? Like sometimes that's the option that you have. If you're the deal finder, you get your equity because you found the deal. You can't do all the parts. So you got to figure out ways to make it work. And yeah, eventually, maybe somewhere down the road, if you want to, you can grow it into such a business that you have hired essentially all of those positions, and then you're the CEO over it. But in the beginning, what you're talking about is exactly right. You've got to kind of find those other people to work with. And the boots on the ground equity position is really, it sounds kind of simple and maybe silly. I know you said, it sort of blows your mind, but really it's not. Like, having someone there is really key, because otherwise, like, if you're the boots on the ground, even if you're new, right, you're starting out and you can provide that service, that value to someone who's maybe extremely experienced. They might have, thousands of units, but they don't live in that market. You save them a ton of time. You save them money in travel expenses. Like, it's actually quite a valuable position to be in. So thinking about what your value proposition is, and your value proposition might be, I live in this market, right? Like, it can be that simple, but you have to do some of that education to figure out that that's a thing, right? Like, you wouldn't probably think that just living in Tennessee or living around Nashville is a valuable thing, or someone who lives like in the hot markets, like someone who lives in Austin, you can be boots on the ground and be valuable for that reason. So I think it's key to figuring out that spot, where do you fit, and that might evolve over time. What do you see? Where do you see yourself fit? Like, what do you think in your vision is going to be your role in the syndication space? And understanding that, sometimes in the beginning you're sort of doing a little bit of all of it. But where do you see yourself, sort of evolving into? What do you want that track to be for you?
Sure. And I would lead off with, you're right. There is definitely going to be a lot of, overlap between what I want to do and what I need to do to get a deal done. And so I do see myself as a lot of secondary, roles to play. And so I would say probably secondary capital raiser, definitely available to be boots on the ground. I'm looking anywhere from Louisville to Huntsville, and then including East Tennessee in there. So obviously Nashville is between Louisville and Huntsville, but Chattanooga and Knoxville are strong performing markets. So it'd be silly to kind of ignore those. And so I can offer to be boots on the ground if there's ever somewhere a time where you want me to drop by and get photos or give an opinion on something, or if it ever did come to being involved in a deal, I'm happy to do secret shopping, monthly drop-ins, stuff of that sort. You need that more so on the front end, right, at takeover and performing the value add business plan for the first 2 years. So after stabilization, that probably turns into quarterly visits, stuff of that sort. So about wear a different mustache every time I go see the leasing agent and ask, hey, how are you doing? Tell me about your property, and see how receptive they are. Calling from different phone numbers or something like that, and seeing how they receive new customers, stuff of that sort. But outside of that, I think the running joke is that everyone's a capital raiser in syndication, right? You should always be doing something to attract capital or to attract investors, stuff of that sort. And I'm not exempt from that.
Yeah. It's a good point. Everybody's probably got to raise some capital. There are people that focus on that exclusively, right? That's their niche. They want to be capital raisers. Some are extremely good at it, and then they partner up with operators. But I think even those that are mainly the operators and partner with other capital raisers, they're raising some capital, right? It's a good thing, because we're providing these opportunities to people. So like the example myself, I don't really consider myself, a great capital raiser. I don't even necessarily see myself having that role in a large part in the long run. But at the same time, coming from the veterinary world, I think that these are fantastic opportunities, and I want to get veterinarians involved. And so I feel it's my responsibility to at least be offering those things out to that community, right? Do I want to be the person that's talking to family hospices and things like that? Probably not. Like, it's like I'm fine to do it, but it's not the part that I enjoy. But I do want vets to know about this, and I think for them to have that sort of know, like, and trust thing, it's probably going to be with another veterinarian. So there's components of it that is unique to each one of us, that then makes our ability to raise capital from those specific avatars would be that's where you have that, sort of almost responsibility to do that. What's next? You got the self-storage deal. What's your sort of next steps that you're planning on?
For sure. Yeah. And, we had a 52 unit apartment complex under contract early this year, and we had to back out of that one because what was perceived to be a stabilized asset was actually distressed after we looked at the accounting. And so, we started doing some direct to seller this year. We're all that to say is like we're trying to engage more small apartment owners directly. We have strong relationships with one or two brokers in town. We're going with the sniper approach versus the shotgun approach. It's easier to manage and maintain, full transparency around that. And so, so continued efforts on direct to seller activity. We've got a couple pokers in the fire, people that are actually responding to us and we're able to engage in a conversation. And so there's probably at least one deal that we are going to get under contract before the end of the year, with a couple other probably maybe under contract next year. It's not my timeline, it's theirs. Right. And so, some of them are more dodgy than others, but I'd love to be in a position to get more pocket listings from brokers, or at least network with people that are getting those pocket listings. Cause it is July 18th. And with interest rates where they are right now, they're going up. We're still seeing cap rates stay flat or even compress a little in some markets around Nashville, which means that my purchase number is getting further and further away from pricing guidance from brokers. And so the only way I see truly a good deal that I want to take other people's money into are going to be pocket listings where I'm solving someone's problem. Right. If I'm underwriting for 15 to 20% annualized returns, I'm not going to be able to compete with people that are 1030 wanting money or have lower cost of capital, and for marketed deals. And so that's where, real estate is a team sport, and it is also it's a people business. And so, I'm not going to get beat by an algorithm if I have better relationships with people that are getting pocket listings, stuff of that sort. So being very open and honest about how I can add value, how I can be an asset to their team is kind of how I'm positioning myself personally. But that's kind of the name of the game right now. Multifamily is kind of lagging in what the market should be doing, which is, slowly correcting itself. And there's probably some markets where that's happening, right? July 18th, 2022 is today. And there's probably some slowdown in some markets. I think generally speaking, you're seeing less people meet the extravagant pricing guidance of a marketed deal. So maybe we'll see something in the near future. But I'm trying to be open to other commercial assets rather than just being, focused on what we'll call our, arguably the most competitive asset class in commercial, which I would say is multifamily. So we, like I said, we closed on a 55 unit storage facility and we bought it in a good basis and it cash flows day one. I couldn't do that with multifamily. Like cash on cash returns for anything right now is extremely low for multifamily. And so maybe like even land flipping, like land rezoning, can I get it rezoned from residential to commercial if it's on a highway? So being more open to unique opportunities like that, I've kind of, I've come to the conclusion, in recent months that opportunity isn't always going to look like what I want it to. It's not always going to look like a garden style apartment complex, like I would love it to. And so it's really been my network that's opened my eyes to that. And so that's where I'm relying on the strengths of other people who are really good at spotting opportunities like that. And I'm dipping my toe in with my personal capital, trying some of that stuff out. Maybe one day I'll take investors into something like that. But I've got to try it out first. So I'm in the trial mode with personal capital for other asset classes.
Yeah. And I've done similar things. We talked about this before we even started recording, but I have the same joint venture self-storage deal that it was just, it's being opportunistic because, obviously interest rates are rising. Everybody knows that. It's causing a lot of fear, but what's interesting is, and I think this is just a lack of understanding, is what people are fearful that are not knowledgeable in real estate, but the investors and things like that aren't, haven't been doing this for a long time, but they don't seem to understand that their money sitting in an account is actually losing them money because of inflation. So it's like, yes, it's scary that maybe returns won't be as good as they were over the last 5 years, like right now. But still better than losing money, right? And that's the thing that I think a lot of people don't understand is that they don't see it as losing money. They don't see that they don't see their bank account balance just going down because of inflation, and so but that's in theory that's really what's happening. Our dollar is losing its purchasing power as the prices of everything goes up, but the values of these multifamily assets or commercial assets are continuing to rise because the rents are rising, and you're having so yes, at the moment we're at this little bit of crossroads where people were pricing was probably too high in reality, probably too high for what kind of it made sense, but now I think we're not going to. It's not that all these assets are going to lose their value. It's just not going to grow as crazy as it was before. And I think that being able to take those opportunities that you see, whether it's a self-storage or it's land deal, or, you have experience with mobile homes. So maybe it's a mobile home park for you, but whatever it might be, and being opportunistic and putting your money to work for you now, it is like, I see these next maybe 6 to 18 months as there's going to be some really big opportunities because of the fear in the market. So that the competition is going to go down, and you can look to very recent history at the beginning of COVID. People that bought at the beginning of COVID just 2 years ago, some of those assets are doubled in value. So it's just kind of you need to understand the asset class and what you're actually getting into. But at the end of the day, real estate tends to be very safe and average to high return type of asset or investment vehicle. Well, let's switch gears, Tommy. Let's get to where I ask you the questions that I get to ask every guest. Love to hear these answers. The first one is based on the name of the show being Know Your Why. So what's your why? What drives you here?
For sure. Yeah, it's definitely family and then legacy, right? And as I evolve in success, right? My why right now is definitely my family, but I think everyone goes on a journey from personal success to significance, right? And so, I'm definitely trying to, get the business off the ground, but I'm also being mindful of like my goals need to evolve, and my goals need to impact more people than just myself and my business. And so I'm definitely on a journey of growth right now. And so, I would say it immediately is just kind of financial and freedom, but I want the opportunity to give back more. Right. And so that's kind of what's driving me every day.
Yeah, I love that. And I've experienced that myself, where it's like, okay, this is definitely for my family. That's what got me going. That's literally why the name of this podcast is Know Your Why, right? It's like my family made me realize, like when I had kids, that I need something, sort of bigger. But then you get to that point where you're like, okay, but once we get to the point where we're good, right? We don't need more. I certainly don't want to teach my kids that, we need more stuff, right? We don't need bigger houses, more cars. Like I don't care about any of that. What I want to teach them is, how can we now turn that into an impact on the world? And so it's a fascinating journey to have that happen, like in your own mindset. And when at the Best Ever conference back in February, I think there was the speakers I loved the most, like the ones that like really riveted me. Those were the people talking about now what they're doing with their impact. Like okay, I got to the point where I'm good. My family's good. Probably my kids are good. But but along the way now we started, sort of switching gears and evolving into this, impactful, charitable, whatever you want to call it, philanthropic type endeavor. And that is super exciting. So I agree with you there. Like that's a very cool thing to feel that attainable, right? Like at first you're like, I just need to be able to pay the bills. And then you're like, wait a second, I can really do a lot with this. So it's a cool, really cool transition and I guess in your mindset and if in the feeling of that moment, right? You feel the momentum building on the business side, but also feeling like what that can do, for others too. So pretty cool. Tell us something about yourself that isn't common knowledge, special skill, hobby, just something to let the listeners know get to know you better.
For sure. So I play disc golf pretty actively. So, I'm decent, I can't drive for 500 yards or anything like that. But, if anybody out there plays disc golf and is in Middle Tennessee, I could probably give you a run for your money.
Yeah.
Or maybe I'm a great doubles partner, whatever you want to perceive that.
That's what I was going to say. I was like, I've always, it looks cool. I've always wanted to play. I've never gotten the chance, but I maybe when I'm out there, you can show me. I'll tag along and see what it's all about. It looks very fun. I'm a terrible actual golfer, but I think I could do okay with disc golf.
Yeah, I have a rather large quiver of discs, so I got plenty to lend you. So nice. Come on out.
Nice. When people hear this, Tommy, how can they reach out to you? What's the best way?
For sure. Yeah, I appreciate that, Jason. And so I would say, my theory on everything is I want to give before I ask for something. And so I guess my gift to some of your listeners is if there's any, I'm happy to talk to anybody about active investing if they want to talk to maybe long-term rentals, or they want to know how to automate their short-term rental business, or maybe they have some questions about some of the self-storage facility and how we're managing that. And so I'm happy to talk to active investors, but I'm also open to educating passive investors. So if there's anybody out there that's thinking, maybe Tommy, I like your markets, but I'm not there, or I don't know what the market is like, and I don't know what cities to be in. I don't know what counties to be in. But I love my job, and I really can't do anything there. Well, there's options to be a passive investor. And so if you go to my website on tbcapitalgroup.com, TB is in Tommy Brant, capitalgroup.com. You'll find an opportunity to download my book. I'm not monetizing that just because I believe in giving first, but it's called A Passive Investor's Guide to the Multifamily Universe. And so with me being an engineer, it is very data driven. It is not fluffy. It's a little fluff, but it's mostly data driven, like hard facts around apartment investing, why I'm bullish on them as an asset class, the outlook, and also gives you an idea to different strategies and stuff of that sort, different asset classes and how it all plays in. And then, at the end, I kind of talk about what I like and where.
Awesome. That'll be great. We'll put that in the show notes so people can check that out. Final question for you. What is a piece of advice you would give to someone who's getting started, kind of early in the game, and they just are thinking about, hey, maybe this is for me, going through some of the processes that you went through, kind of work through it in your mind? What would you tell them?
For sure. I'd probably 3 steps. So one is get educated partially, accept the fact that you don't need to know everything to get started. So we'll call it partial education, decide on the market next, and then build a team around that market, partner up with people to help you scale your business.
Yeah, no, great advice. All really important steps for, kind of moving yourself forward in the business. As we talk, nobody's going to start at the top. So it's kind of, you got to find that way to work there. Well, thank you, Tommy. I really appreciate having you on the show. I think this was a great conversation. It will be very, very helpful to a lot of people that will listen. It's going to be, I think there's a lot of actionable stuff for people that are, kind of maybe not 10 years into this. I think it actually is probably more helpful when people are relatively early on in the space, but have that recent history and recent experience to share about, kind of this is what it took me to get to this point. And it's still sort of fresh of mind. So I appreciate you sharing all that. And I think people will definitely get that in the show notes, but check out your book. I think that'll be a great thing for people to lean into as well.
Right on. Thank you very much, Jason. I appreciate the time and the banter on here. That's great.
Yeah. Awesome. All right. With that, we will go ahead and sign out.
I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Balara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you.